conversation on the markets forward with George Joseph from ASK Investment Managers, who's joining in now. George, good morning. Thank you for joining in. Well, we are on the cusp of yet another earnings season, but the news flow ahead of the earnings season has been anything but positive. Barring autos, there have been significant headwinds from IT, from pharma. We heard from HUL on Friday, might expect a similar reaction from its peers as well. What are you anticipating from this quarter? Do you expect it to be as subdued as the first one, and then you see a recovery in the second half?
I see there is quite a lot of news flows in the immediate past what we have seen, and what we believe is that H2 should be good. This quarter should chug along. May not be very good at this point in time because a lot of GST related news flows and some disruption in the supply chain has been there. So we will see some rebound happening in the next quarter onwards. So H2 should be reasonably a good rebounding quarter is what we believe.
We've been talking about how markets are oversold last week, but that trend seems to continue. There's still some fall from the highs of today. George, what do you make of other fundamentals apart from earnings? Is there anything which could be a trigger for the markets from here on?
Yeah, a lot of triggers. If you see the rate cuts have happened, if you see from 6.5% repo rate has moved to 5.5%, 400 basis point overall rate cuts have happened. CRR cut of 100 basis points. And then you saw the GST cut and the benefits coming through for various sectors. And also we are seeing the tariff noise is at the peak. That also will mellow down over a period of time. So maybe a couple of months from now, the tariff the news flows will be significantly different compared to what it is today. So 50% tariff hike on India, and it is one of the highest in the entire emerging markets, and so on and so forth. Those news flows also will be behind. So what we are believing is that the worst of negative news flows in the near term is already there, and you will see the earnings rebound and the GDP rebound. Already the GDP is in a decent shape in terms of growth rates. We'll see the earnings also start rebounding from next quarter onwards. Net, what we think is that from valuation point of view, the large caps look very interesting, and it is probably trading marginally below the 10-year average. And when you look at mid and small cap space, that's where a little bit of pessimism from my side is there. When we look at many stocks and sectors are trading at maybe 2-decade high valuation. So that's where probably the earnings expectations have gone north of much what was needed. Whereas large cap, many companies, we see there is a big opportunity to make money in the next 3 years.
George, the one pocket that was holding up the market so far before this fall began was the auto space. And this was after the GST rationalization was announced. Stocks moved up 15%, 20%. We heard from the companies as well that the first day of Navratri was very encouraging. But the bottom line being that the first half has been a complete washout for these companies. And so would this 8-9 day sale be enough to justify the kind of moves that you've seen in these auto names? Because most of the larger names, be it Maruti, Eicher, all continue to trade at or near record high levels.
So these are all structurally good businesses which you can own from the next many years perspective. And we are still, if you look at from the auto volumes perspective, there are changes happening in the technology from the ICE engines to EV and so on and so forth. But nevertheless, Indian demographics clearly suggest that there is a significant room for these sectors to do well. So auto, pharma, FMCG, IT, and banking historically has been a good space to hunt for ideas from a structural growth point of view. But at the same time, right now, from the context of US market situation, US economic situation, we believe that this particular sector, more domestic-oriented sectors like auto, banking, looks extremely attractive from the next 3-year perspective to hunt for ideas and make money. The valuations probably has caught up in many cases, and that has been the case for across the board in the market. But in the case of the GST benefits coming in this sector very clearly, I believe next 12 months, the eye will be on the GST beneficiaries. So auto is one among them. Therefore, there's a good opportunity to look to make decent returns in these names in the next 12 months.
All right, so Bank Nifty is in the red right now. There's a sharp fall at the day's low. We've been talking about enough triggers for the market to see those higher levels. But for now, it is a sharp fall from the highs. Even the Nifty just at the flat line with some positive bias. But yes, a majority of those losses are coming in from Bank Nifty. We do have some of these names which are at the day's low. Kotak Mahindra Bank, there is Axis Bank. You do have Reliance Industries, which is at the day's low as well. Tech Mahindra, some of these IT names not contributing too much. So Tech Mahindra is at the day's low as well. Hero MotoCorp, Maruti Suzuki, Bajaj Auto. We were discussing how autos could be a big beneficiary of the entire GST cut phenomenon that is taking place. But yes, after that stellar up move that we've seen in some of these names, some profit booking is something which is par for the course.
Just not any strength at higher levels for the index or for the Nifty Bank for that matter, because the Nifty Bank had closed below that 54,500 mark last week. We saw some rebound from those levels, but yet again, the Nifty Bank failing to sustain above that 54,500 mark as well. George, pleasure having you. Thank you so much for sparing time and joining us today. Looking forward to having you more often on the platform. George Joseph there of ASK. The market, though, given up almost